welcome to the latest webinar with me, Andrew Dawkins, and
myself, Rachel Blackhall,
and also myself, Daniel Baverlock.
Hello, lovely to have you with us this morning, and thank you very much. And for those people who are on catch-up, whenever it's good morning, good evening, good afternoon, and nice to have you with us. So, what are we going to look at today, Rachel?
Usual format today. We'll start with what's been happening at A.R.D. Consultancy, and then over to Andrew to give us an overview and market update, what's happening in global economies. And then we're joined by a special guest star, Stewart Dick from Wesleyan Group, who's going to be introducing you to one of their funds that's a little bit different on the market at the moment. So we thought it might be of interest to our clients. And we'll round off with question and answers. So any questions you have for myself, Andrew, Dan, or indeed Stewart, please just type them in as we go and we'll get to them at the end.
What do you think the most common question is going to be today?
Where did you get your shirt?
Yeah.
Haven't had one yet.
Oh dear, yes. Well, it's a sideline I've got, so I will let those people interested know.
You got a discount code?
Ooh, no discount. Goodness. Oh, right, okay, so we're kicking off then.
What's been happening?
So it's over to me, I guess. So some good news. As always, the marketing manager's always got fun, good news to discuss. And one of our teams that we sponsor, we've been sponsoring for a number of years now, the Caledonia Gladiators. I think we mentioned beforehand how successful their season has been thus far, and it concluded with a BBL Trophy Championship victory, which is the first trophy that the Caledonia Gladiators have won, or as the Rocks used to be, in 20 odd years. So it was a fantastic event. It was in, I believe it was in March, then it was played. They made the final, and it was a packed Emirates Arena. It was quite fitting as well, because it will be the final game that was played there at the Emirates Arena for the Gladiators, as they're moving to East Kilbride next season.
Where?
East Kilbride, I know.
It's like a true local.
So East Kilbride, in a place called Play Sport. So they're big moves for the Gladiators, and the game itself was, I think it's renowned as one of the greatest finals in BBL history. So it did come down to the final shot of the game, but it wasn't just that. The shot was taken on the buzzer. So the game was finished on that final shot, which David Sloan hit in the corner. It was a corner three-pointer, and the game finished 73-70 in favour of the Gladiators. And I was lucky enough to be there with my boy and enjoyed the celebrations that happened. And let me tell you, it was extremely loud in that arena, probably the loudest I've ever heard it when that shot went in. It was phenomenal to see. And a lot of the old hands that were there from the Gladiators' old days, so Ian and Celeste, which Andrew and Rachel know quite well, they were there to celebrate the victory too. So congratulations has to go off to the Gladiators. I'd say it's because of the sponsorship from A.R.D. only, wasn't it? Our support over the years. It's got something to do with it, doesn't it? Also, the new ownership, I think they're investing quite a lot in there. So, bright future ahead for the Gladiators. Speaking of bright futures, we'll move along to a member of our staff, Stacey Borthwick, who now has a bright future. No longer Stacey Borthwick, yes, bright future with now her husband, Gary Wardlaw. So if you do get an email from Stacey, it's no longer Stacey Borthwick. Do not delete it, as I almost did when I first got an email from her. She's now Stacey Wardlaw, as you can see there on the screen if you're having a look. Lovely dress. Beautiful dress, beautiful ceremony, I believe. I heard we were there for the evening and celebrated, as we always do, in style, didn't we, Andrew? Yes, it was lovely.
We did indeed.
It did. Celebrating Stacey. It was a fantastic day, and I guess on behalf of everyone here at A.R.D, I want to wish them the very best for their future endeavours. And also, if you give us a call in the office, then congratulate Stacey, I guess.
Yeah.
She'd like to hear it. So yeah, that's what's been happening behind the scenes. A lot of fun stuff. And now should we get to the nitty gritty?
Back to business.
Back to business.
Okay, so what's been happening? So I think the last few months and with the market updates and these webinars, there were a few comments saying, "Oh, good grief, you're awful gloomy at the moment." So I thought, well, we'll try and pick things that are on the whole doing quite well. So we start off with the global economy generally. I think most people are surprised by just how well it's doing. Oil and gas are both down in price, which helps considerably. Japan is in the news at the moment. Well, their stocks have risen to, highs not seen since the 1980s. It's taken a heck of a long time for the Japanese economy to come to life, but that's what's happened over the last few months or so. It's one of the fastest performing or the best performing markets currently, and consumer confidence and spending is a lot higher. They've also announced just in the last couple of days, £18 billion of new investments in the UK by Japanese companies, mostly in the offshore wind sector, but it's not an insignificant amount. And we do need trade deals with Japan and various other countries as well around the world. So that's positive. In the UK, well, if you remember last year when sterling hit almost a pound to a dollar, we're now sitting between $1 equals 124 to 126 against sterling, so a 7% rally in the first quarter of the year. So that's good. Still very low unemployment. 156,000 people have joined or rejoined the workforce this year, and it's an unemployment rate of 3.9%. It's still well below many similar-sized countries and economies throughout the world. So it's very good news on that side. Number of firms going bust has dropped last month, so that's down. But I think a lot of people were expecting the numbers going to increase, but no, that didn't. Consumer confidence increased in April, and the score is now above 100, and that's positive. And Currys top man said just last week that some customers have been more willing to splash out on big ticket items, probably our banner behind us, since the end of 20, rather than keeping the money in the pocket. So that's good. Since the end of 2020, UK equities have returned 37%. Compare that to US equities at 21%, and we're still considered to be cheap. So lots of good news behind the scenes. In the US, retail sales are rising, lowest unemployment rate since 1969. And the consumer price index, it's fallen to its lowest level now in 2 years. Still great returns, Rachel will come to that, delivered by a number of the companies and a number of companies we hold shares in as well. The EU, across the water there, beating growth forecasts, most of the countries over there. Employment is starting to rise again, been fairly strong around most of the bloc. Inflation falling slowly, not huge, but still coming down. And the other good thing that we actually have got, apparently fuel reserves are up 60% on where they should be this time of the year, which means that hopefully next winter, even if this horrible war in Ukraine continues, the EU should have enough fuel to escape power cuts and shortages, etc. Finally, China exports up 16.8% in April, 16.8% increase in exports. As we said last year, once China comes back online, they sort of make or get involved with most things that we use day to day, and them coming back online means that we've got more goods coming into the country, which means that it helps with inflation reducing. Interestingly, electric vehicles made up 61% of their total exports. I think most of those new cars could probably come to Falkirk, because I was noticing today that Mix Road car park, my word, how many car park spaces have we got for electric vehicles now? Ridiculous. I mean, there's about two of the blooming things work, the other 52 of these terminals, there's nobody there. No. And they're taking up all the room. So us ICE car people, we can't have that. So if I had a car, I'd be fuming. But anyway, that's the end of the rambling on the market. So I think generally there's a lot of good news stories out there. It's just as usual, the BBC in particular seem to just concentrate on doom and gloom. And you think we're a second-rate country, but actually the UK is doing very, very well, despite all the nonsense that we hear. So cut through the nonsense and get to the good stuff. And actually, we're not in a bad position. Investments are starting to pick up in most sectors, which is super. And eventually, the stupid banks will stop increasing interest rates willy-nilly, as they have been doing, because that's just doesn't make any sense at all. It's the only trick they've got in the toolbox, and really once they get to the end of that, then things will improve considerably. Yeah, so there we are. Any questions about any of that, then please do let me know, or you can make your appointment here in the office for the next review. Over to Rachel.
Yeah, so as we normally do, we thought we'll shine the spotlight on a few of the companies that are within our various investment portfolios, because yes, it has been a sort of an extended period of doom and gloom, but there are some good news stories out there. So I'm just reiterating. We thought we'd try and pick them out just to highlight it once again. So first up, we have Apple, and they posted better than anticipated iPhone sales in the second quarter of this year, beating Wall Street expectations.
What number of iPhone are we now up to?
Oh, I think we're not even on numbers now, we're on like letters. I know the mine's a letter, but it's a few years old now. Can't remember now. In the past, they've suffered with supply chain issues with the factories in China being affected by COVID lockdowns. But we're moving on from that, and they had no material shortages for any of the products over the last quarter. So yeah, we are seeing improvement, and Apple, as we know, is the biggest stock in the world by market capitalization. But to give you an idea of just how big they are, their market size is circa $2.7 trillion. And for perspective, the FTSE 100's total market cap is circa 2.6 trillion. Just give you an idea of exactly how big Apple are and why many of the fund managers just continue to hold it anyway. So they had a little bit of a wobble previously, but certainly onwards and upwards.
Is a wobble, is that a new iPhone maker?
Coming soon. And then moving on.
The Apple wobble.
We've got Novo Nordisk, another company that we have touched on in previous webinars.
Was that cow doing balancing a ball on top of its head?
I have no idea.
Come on, give it.
But they are the Danish pharmaceutical company and have hit headlines recently for their diabetes drug called Ozempic. So it received FDA approval and has been developed as a prescription treatment for type 2 diabetes. But where it's really been focused on in the headlines at the moment, it's been gaining a lot of attention because celebrities have been using it as an appetite suppressant. So then this in turn meant that it became a hot topic across social media around the world, with lots of people trying to get their hands on it for weight loss. So yes, although it's a diabetes drug, it's certainly been used a lot for weight loss.
What are you looking at me for?
I didn't mean to pause there. So yeah, all this attention has meant that Novo Nordisk's share price has gone up by over 48% in the last 6 months. That's a massive, massive increase, and hence why it's certainly holding its own in the higher equity content of the portfolios that we've got. Finally, we have Diageo. And I know that this is one that we talk about a lot, but mainly because there's always something in the news about them. Most recently, they've acquired a premium rum company called Don Papa Rum. We said before that they're seeing the premium drinks market as the biggest area of growth, which again, I think gives us some good news into where people are spending their money, and they're looking to buy those premium range drinks, and hopefully not feeling as tight as it once was. So they're adding yet another brand to their portfolio. On the business side of things, they just announced that their CEO will retire this summer and pass the baton to the current Chief Operating Officer. These announcements tend to spark a little bit of concern or question about what changes a new person is going to make to the running of the company. But this newly appointed CEO has such a successful track record of heading up companies like PepsiCo, Mars, Kraft Food, and Nestle, that market analysts and fund managers have all responded positively to this change. So much so that only this week it was revealed that Warren Buffett's Berkshire Hathaway has taken a $41.3 million stake in this UK company, purchasing over 227,000 shares. That's a massive, massive investment into into Diageo. So yeah, once again, a company that's been in our portfolios for a long time, and hopefully it's just going to be going from strength to strength.
Lovely.
I think that's me. Any input, Andrew?
Any input? No, you said it all, I think. Repeating yourself.
So I think what we're going to do now is move over to Wesleyan. However, before we start with Stewart, what we'll do is we're going to play a video. So we're going to do something that we haven't done before. It's a different way of playing the video. So if you can't hear the sound, just press reconnect. What? So just press reconnect and it should be okay. We'll sort ourselves out here at this end, and the next person you'll see will be Stewart. So hopefully enjoy the video.
Track record. We maintain diverse portfolios across our fund range, and our buy and hold strategy means we look for long-term value over short-term gains, whilst keeping trading costs to a minimum. Managed by our award-winning in-house investments team, our With Profits fund invests in UK and international shares, property, bonds, cash, and other related investments. We are committed to investing in a sustainable way. This means caring about not just how we invest, but also where we invest your money. Which is why we don't invest in tobacco production or civilian firearms, for example. While investments are subject to market volatility, our funds seek to reduce sharp rises and falls through a mechanism called smoothing. This means holding back some returns when market performance is strong to support returns when the market experiences losses, helping to mitigate the effect of any short-term market fluctuations. Meaning strong performance in one period helps to offset weaker performance in another. At Wesleyan, we've seen plenty of those ups and downs. We've been supporting our members for over 180 years, through wars, political upheaval, and economic downturns, so you can trust us even in unsettled times. Our mutual status and financial strength means that in addition to the returns generated by our investments team, your investments may also be boosted through a share of our profits. Wesleyan, together with your advisor, look forward to supporting you throughout your investment journey.
Thank you, and good morning, everybody. So my name is Stewart Dick, one of the regional sales managers with Wesleyan, and delighted to be here speaking to you this morning about the Wesleyan proposition. Now, let me just see what's going on with my slides. Bear with me 1 second. And there we go, thank you. So yes, Stewart Dick, regional sales manager with Wesleyan. So it's my role to support financial advisors across Scotland and Northern Ireland, including Andrew and Rachel and the team here at A.R.D. So today we're going to just expand a little bit on that video that you've just watched. That video is essentially a bit of a scene setter to Wesleyan, an introduction to our Smooth with Profits fund. So I'm going to spend the next kind of 10-15 minutes or so just giving you some more information, a little bit more detail on what we do and indeed how we do it. So Wesleyan, we've been around for a long time. We were established back in 1841, so 182 years old this year. So really well-established, long-standing business. We're talking particularly about our With Profits fund today. We've been running With Profits for a very long time as well. Our first With Profits policy was written back in 1916, so well over 100 years experience there. That was in the form of a life assurance contract. We've been running With Profits as a savings and investments vehicle for well over 50 years as well. So huge experience there. We are a mutual, which means we're owned not by shareholders, but by our policyholders and by our members. That has two core meanings for me. One, it's a great place to work because that mutual ethos and those mutual values are really important and an awful lot of added value to what we do and how we do it. But it's also really important in terms of how we can run our business, how we can manage money, how we can support the propositions that we deliver to our clients and our investors. So that feeds directly into our financial strength, which we'll talk about as we go through. We'll also touch on other parts of the slide, the award-winning, the expertise, all the things that come together to make Wesleyan the strong proposition that it is today. Now, we're based down in Birmingham. We've always been Birmingham based, and that's where the company was established way back 180 plus years ago. We came out of the Wesleyan Methodist Church and that traditional by the people, for the people mutual model, essentially helping people that were struggling at the kind of tail end of the Industrial Revolution. To give you some examples of what mutuality means, and for me it's about doing the right thing, essentially. If I go back to World War II, there was, as you can appreciate, a number of death claims coming through as a result of the conflict coming through to Wesleyan as an insurer, but without what you might call a paper trail, no evidence, sometimes no bodies, etc. So quite difficult to administer. Wesleyan took the view, the right thing to do here is simply pay out on those claims regardless, and that's exactly what we did. A bit more recently, another example, if we look at the mortgage endowment crisis, there was quite literally millions of policies up and down the country that were really struggling. They were off target, and the expectation was they were going to fall short and not pay out the amount that clients and individuals were expecting and indeed needing to repay their mortgage at that point in time. Wesleyan took the view the right thing to do is honour our commitment. So if investors and clients continued to pay their premiums, we would honour that commitment and make the payout that was expected. So again, doing the right thing. Now, those examples aren't necessarily directly related to the with profits fund that you might invest in via ISA or pension with support from Andrew and the team here at A.R.D, but they do give you a sense of the organisation behind the scenes, the organisation behind the fund. I hope that gives a little bit of comfort. Mutuality is really important as well in terms of how we run the business. I touched on that before. Without shareholders demanding what we may do with our funds, looking for dividends, etc., we can use our resources to support the business and support our investors. That allows us to hold significant capital reserves to underpin things like the smoothing mechanism, which is inherent in this with profits policy product that we're talking about today. And we'll touch on that as we go through the presentation as well. We are active managers, investment managers, utilising our expertise to deliver long-term results for our investors and our clients at a low volatility level. That is the crux of the proposition. Now, if we start to put some numbers on that, the core figure here is up in the top left corner, 373%. That is our solvency ratio. So solvency ratio, as it says, it's a measure of financial strength, and essentially what that's telling us is the extent to which our assets cover our liabilities and our commitments. So it's a real important measure of financial strength, particularly when we're thinking about a with profits or a smooth fund, because you need to have sufficient capital to underpin that fund and back up the smoothing mechanism. To put some context around about that, a solvency ratio of 100%, statistically speaking, means that the fund has got the resources and the ability to ride out a 1 in 200 year market event. If we're looking at a solvency ratio in excess of 300%, as we are, that means we've got the ability to ride out a 1 in 2,000 year event. So great strength and depth, great robust footing for the with profits fund to stand upon. That fund currently sitting in the region of 4.2 billion. So not an insignificant fund, and as you can see, clearly a very important part of the Wesleyan universe. The other figure on that slide that I like to talk about is that £5 million. So £5 million that we've donated to charities and good causes up and down the country, something that's very important for us, true to our mutual values, essentially. So if that's a little bit of background on Wesleyan, we'll move on now and talk about the with profits fund in particular, what that looks like, how it's made up, how we smooth returns to deliver the best possible journey for investors. Now, I'm going to start with the investments team. I'm not going to do names and biographies for all the people you see in the slide. We're really just highlighting we've got great experience all within Wesleyan. It's all done in-house. We've got members of the team that have been with us for 20, 25, 30 years. So huge experience in the investment space, within the with profit space specifically. Fantastic for us to be able to draw on that experience. We've got new entrants to the team as well, bringing in fresh ideas and fresh thinking equally as importantly. There's real specialisms in the team, as you probably expect. So we've got in-house property experts, property managers, surveyors, etc., running the property part of our portfolios. We've got experts looking at areas like sustainability and responsibility that we have as investors. That's an area that I talk about quite a lot. Actually, we're very proud of all the awards that we've won. You can see some on the screen there. But key for me, or one of the ones I talk about the most at least, is that kind of top middle, the Responsible Investor of the Year award last year. ESG considerations or environmental, social governance considerations are really important to us as investors. Sustainability is a core focus of the business. We are committed to being operationally net zero in carbon terms by the end of this year, and we've also set some really quite ambitious targets to be completely net zero across the investment portfolio as well going forward. It's a topic we could spend an awful lot of time talking about, the whole ESG and sustainable responsible investing area. It might be a future webinar for Andrew and the team, certainly worthy of future attention. Looking at this fund in particular, I just want to give you a feel for the fund makeup and our investment philosophy. So Wesleyan are what I would describe as long-term value investors. So we invest for the long term. We're able to take that long-term view because of that financial strength that we touched on, that underpin that the fund sits on top of. And being a value investor simply means we're looking for, utilising our expertise to identify opportunities in the market where properties, equities, other assets are perhaps undervalued, perhaps looking a little bit cheap. So we can pick those up at a good price point, hold for the long term, and drive returns for our clients and our investors. When we're talking about driving returns, we very much believe in real asset exposure. So that's direct holding of equities, that's direct property to drive long-term returns. Just to give you a little bit more insight, if I look at that equity content in the fund, as you can see, about 65% of the fund sits in equities at this point in time. And of that, about 65% of the 65% is in the UK at this point in time. We still believe the UK market, and Andrew touched on this before, we still believe the UK market has value. It's served us well in recent years. We think there's still value to be had. There's still some opportunities to be capitalised on in the UK market. So that's where we're focusing just now. We've got a definite tilt there. As markets shift more globally in the fullness of time, our investment tilt will also shift, and that active management coming to the fore. The other part I might talk about is property. 8-9% of the fund sits in property currently. That's all bricks and mortar, all here in the UK. So don't own any property funds. It might bring some challenges around about liquidity, etc. It's all direct holdings that we own and manage. There's not an awful lot in Scotland, I must say. We hold an industrial estate just outside A.R.D. We've got some student accommodation in the Glasgow area, and about 110 properties in the portfolio as a whole. The other part is worth highlighting is that top figure, that 5.91%, almost 6% in cash. That's a little bit high right now. We're very comfortable with that figure being a little bit lower. The reason it is what it is we're sitting on a little bit of dry powder. There's a lot of volatility in markets just now, which essentially means there's opportunity. So we're already seeing perhaps challenges in the commercial property space, interest rates rising, that puts pressure on properties that are leveraged. We see opportunities in the equity space as well. So going back to that long-term value-driven investor, we need to be in a position to take advantage of the opportunities, so use some of that dry powder to make investment calls going forward. So if that's a fund makeup, that's what's driving the returns. The next question is, how do we then smooth those returns out to give investors the best possible journey? And we can see that on the diagram on the screen. Very simply put, we will hold back part of the returns in the good times to support the fund in the more challenging times. So as a result, clients see an investment journey closer to the grey line on screen rather than the ups and downs of the yellow line. In reality, there's a little bit more to it than that. There's a little bit more science involved. And we use an intelligent formula to consistently and constantly manage the gap that you see there between the smooth value and the unsmooth value. So that formula analyses that gap every single day and makes small adjustments every day if required to make sure that the gap remains manageable, to make sure that the fund is continuing to deliver what we would call fair value for all investors, whether that's people investing in the fund at day one, whether that's people that have been invested for a period of time, perhaps people taking their money out. Fair value for all is an important message for us, and we achieve that by consistently managing that gap in that smooth price. That formula, that algorithm, because we're managing the price on a daily basis and making those adjustments on a daily basis, it means what you never will see is a sharp adjustment. You never see a big step up or down, which has been a feature of traditional with profits in the past. You might call it a market value adjustment, market value reduction, unit price adjustment. Those are simply not a feature in this fund. They don't exist here. So as a result, you experience smoother smoothing. So what does that all mean? If you bring all that together, what does it look like in terms of performance for you, the investor? And I'm going to start here with a chart from July 21. As I said, we've been running with profits for a long time, but the fund was only able to be accessed by financial advisors such as A.R.D. in the summer of 21. So that's my start point for this chart. And we've charted here the Wesleyan With Profits Growth Fund, so that's the gold line along the top, against the average investment sectors out there. So the black line is a mixed investment sector with 40 to 85% equity. Your blue line, mixed investments with 60% equity, and the red line, 0 to 35% equity, just as sector averages. And we can see the Wesleyan Fund down that smoothing mechanism, doing exactly what I'd expected to do, wanted to do over that period. Nice steady performance, taking out that short-term volatility that can be problematic for investors. Obviously, we have been running the fund for a long time, so we can zoom out and give you a longer-term view, a full 10-year view in this instance. And again, you can see the same comparisons against those average investment sectors, long-term strong performance, and that nice smooth journey. Because of that time frame, we can see the impact of the COVID crisis in spring 2020. We can see that on the chart there. The fund's not a magical gravity-defying fund. We were impacted by COVID like everybody else was. It was a very challenging time. But what you do see there is over that COVID period, the fund fell by about 6.5% to 7%, and it took about 2.5 to 3 weeks for that fall to work its way through as that formula that I mentioned made adjustments every day through that period and then started to feed the recovery through as well. So not nearly as far or as fast in terms of falls in the market. Again, the benefit of smoother smoothing. This is all about managing volatility. So it's worth perhaps showing that in a slightly different format in the scatter chart. Here we're looking at the same data, but in a different format, as I say. Along the horizontal there, on the horizontal axis, we're looking at volatility. So how quickly a price can move up or down, how unpredictable that price movement might be, charted against performance on the vertical axis. So we're looking for strong performance, low volatility, top left quadrant, exactly where the Wesleyan fund is sitting, exactly where I would like it to be. So to bring that through into a summary for you, mutuality, really important, as we said, not just because of who we are and what we do, but how we can manage our money and our funds and our assets. So fund holders, not shareholders. Real asset exposure, driving those long-term returns through exposure to equity and property, reducing the volatility on the way through. That is fundamentally what we're about. Modern products, ISA, pension investments in the platform universe, so easily accessible, easily usable for Andrew and the team here at A.R.D. It means that the fund can be held as part of a portfolio solution, so it can be held as a standalone solution, it can be held as part of a building block and a wider solution. That formula we talked about, that daily smoothing, that daily pricing, no market value adjustments or movements, daily access for investors in or out. Financial strength, we talked about it, really, really important to underpin the proposition, give us that sustainable and robust smoothing, that's absolutely vital. And the final point on the slide there is just to say this is a life and pensions fund. That's a structure that we use, which is a little bit different to other investment funds you might have seen in the past, which would typically be a unit trust or the like. All that means is this is a contract of life insurance, so there's some additional benefits and factors there. If you're going to invest in this fund via an ISA, then there's an additional benefit on death. So if you were to pass away, the value would be 100.1% of the holding. So there's a slight benefit there, small but important. And it's worth picking up with Andrew and the team as to what different fund structures mean for you and your individual planning. Hopefully that's been a useful oversight into Wesleyan and indeed the With Profits Fund itself. Any questions, please do feed them through to Andrew and the team, and we'll be happy to answer them for you. Thank you very much.
Well, that was great. Thank you very much, Stuart, for coming through and delivering that presentation. It was very informative and useful. And the other thing, which is very, very good, I've got something here which
yes.
dropped off the other week. It's a notepad, and talking about the sustainability and the carbon neutral and all the rest of it. You'll never guess what it's made of.
We know.
Apparently, Stuart says it's recycled stones. Incredible. People waste a bloody ton, but that's my French. But thank you very much. So yeah, recycled stone is the way to go. Lovely. Thank you very much for that. And any questions you've got, let us know. Speaking of questions, Dan,
we've got one, which is fantastic, isn't it? Well, one's more of a statement, which I can share.
Yeah, you do the statement.
Okay, brilliant. Well, this is our good friend Robert Cook. So we're talking about the Gladiators, the sponsorship that we've got. It's not the only sponsorship we do. So Robert was on to say that the other sponsored team that we sponsor, the Whitburn Junior Football Club, have won the league again this season and are promoted to Division 1 of the East of Scotland League, having only lost one game all season in the league. Again, I think that's down to the A.R.D. sponsorship, Andrew. I just think so. Following the success of these teams.
Presumably that means they're going to have matches against Falkirk then, or the next season.
Oh, there you go, season tickets. And the question we've got in is from our good friend Barry Stewart. Thoughts on the potential US debt default, Andrew? Over to you, sir.
I was going to throw this one up to Rachel, but
just throw it right back.
No, it's something that comes up year after year after year, and it's a way by which the Americans decide on how much money they're going to spend to support public spending, things like defence and various other things in the US, and the parties have to pass the That's the motion to agree to spend the terrific sums, trillions and trillions of dollars that are needed to keep the economy going. And we all, well, always, but often we get to this position where the two parties can't agree, and they do this fighting in front of the cameras, but behind the scenes they're doing deals all over the place. And if they did default, well, that would be horrendous, and it would really put a lot of strain on what is a very, very bad position for world debt anyway. So it's they will come to an agreement. A lot of backroom deals will be going on behind the scenes, because if they don't, it's too catastrophic really to be believed. But really they need to get this sorted, because it comes up time and time again, especially if you've got two parties that are both wanting to posture for the forthcoming presidential elections, which will be between the same old two candidates, it looks like. Anyway, that's the way that it works over there. I'm sure they will get resolved. But it just shows, actually, again, the level of debt around the world we've got, that governments are racked up. I mean, here in the UK, £2.6 trillion worth of government debt is an obscene figure. And we can only get that down by bringing growth to the economy. And that's what we should be concentrating on, growth. Above anything else, and that will then pay the bills and pay back all this stupid amount of debt that the Bank of England has let us accumulate. Anyway, on that positive note, stay tuned. We'll be back after the summer break. We've got a few interesting guests coming up. We'd love to hear your thoughts as well. If you'd like us to invite any people in, any corporates, any individuals, we'd love to have them in. Kylie will be making an appearance before Christmas, which will be good. And anything to add, Rachel?
No, just speakers or even any topics that you want touched on. So anything at all, we'd love to hear from you.
That's it. Thank you very much for tuning in. And if you're on Shopify, you wouldn't have been able to see the book that I held up there, but it was a book I was holding. So anyway, there we are. Dan, any last words from you? No, good. Thank you very much for staying tuned.
Let's get that in.
Bye, everyone.